Okay, I'm starting. And again, hello everyone. I want to say thank you all for participating Sanction Scanners webinar today here. And my name is Ege, and I will be your host for today here. And I'm also working as a CO team member in Sanction Scanner team. And also, before I forget, I have to say thanks to all Sanction Scanner team for making today possible. For a short brief, I have to make some short brief about Sanction Scanner with my team. Sanction Scanner is one of the leading AML software solution providers worldwide, and with it's more than 250 customers from 50 countries. And you guys, anyone, if you need any kind of solution about AML compliance, please reach out to the team after webinar. So today we will talk about watchlist screening in anti-money laundering compliance. And as you know, today's financial landscape, watchlist screening is not just about to prevent financial crimes for companies, but also it's important to protect global economy from the black market money. So I have two valuable speakers here today. With me, Mario from Revolut and Christopher from Sightline. Guys, you are welcome here. Maybe you can introduce yourself in short. Mario, do you want to start?
Sure, thank you, I appreciate that. Hello, everybody. Thank you for coming to this important webinar. Some of you already know and I've already spoken with in previous webinars, but I am the current BSA officer at Revolut, technologist for US. As all you know, BSA officer, MLR, and other locations. I'm in charge of the overall AML BSA comprehensive financial crimes program for Revolut. Prior to this, I was a head of watchlist screening for an African fintech, where we had a very large team, utilized many solutions, and built an incredible program. So plenty of experience in this, 13 years of financial experience, from AML, fin crime to business operations, watchlist screening, cryptocurrencies, and investigations and the like. So it's a pleasure to be here. Thanks, Iggy.
Thank you. Christopher, do you want to add anything?
Absolutely. Thank you, sir. My name is Christopher. I've worked in governance, risk, and compliance for close to 20 years. My experience spans across casinos and card clubs, fintechs, prepaid access, and traditional brick and mortar financial institutions. I'm currently the global head of risk and compliance and the BSA officer at Sightline Payments. Also worked very closely with Mario in a previous world. It was fantastic growing teams and building out the technological solutions for a rather large African fintech. So it's nice to be on this call with him and to co-present on this topic.
Fantastic. Thank you guys again. You are here for today with us. And I'm starting my first question. It's a kind of intro question. Maybe Mario, you can start with it. My question is, why is watchlist screening important for sanctions and due diligence compliance? And we know it really relates with AML program of companies. Maybe you can touch also this manner. Mario?
Of course. Thanks, Hegi. Yeah, it's an important question, one that many of us learn either the easy way or the hard way. And before I begin, I do have to say that everything that I say on here is my personal experience and my my own personal thoughts. It's not representative of Revolut directly or any other entity that I work for. So with my experience, it's important to have a very well thought out, plan, tested, and continuous testing of watchlist program for a variety of reasons. We obviously know that we have a regulatory requirement to do this. So we can go ahead and first and foremost screen those individuals or entities that onboard to our platforms. But mainly is to identify risks with individuals and entities, whether they be fin crime or sanctions or otherwise, that don't fall within the scope of the risk appetite for our companies. We need to understand what it is, what level of risk that we're onboarding. what type of requirements as we onboard with these individuals and entities that are are placed upon us. And this goes it's far and wide, as we know, through either PEP screening, OFAC screening, adverse media screening. All of that forms a risk profile for the customer. So all of this, it allows us to follow on and build programs that really show what the risk appetite is, what that risk assessment or that risk tolerance that we have. Everything from our CIP verification, through our ADV vendors, everything through the actual screening process, the tech behind the screening process, the data that we're utilizing in and out of these programs, how that works with our monitoring teams, our analysts that are working this dispositioning that we're doing with these alerts, what we're accepting and what we're not accepting. All this forms part of the AML program, and it's something that's very important. We need to make sure that we're not only protecting our customers, our clients and our employers, but also the financial system as a whole, to try to catch illicit crime, financial crimes, and the like, and terrorist financing. So overall, it's incredibly important, as we all know. So, Chris, I don't know if you want to add anything onto that. I know you have a lot of experience, but yeah.
Yeah, I appreciate that. I'm going to second the initial caveat you started with. I'm not an attorney. This is not legal advice, and this is not the opinion of my company, but it's mine and mine alone. But you make a good point, and I think any decent KYC CIP program, including watchlist filtering, is really going to complement your AML program and your fin crime program. Yeah, and we'll talk more about this as we continue down the session, but I think it's essential where we focus on good data in and good data out. So I think in that onset of getting to know your customer, establishing that KYC protocol where you know your customer, and maybe even in some jurisdictions where you might have to know your customer's customer, you're really finding yourself in a situation where you're reliant upon that data, not just for a strong adjudication process and making a determination as to whether or not it's a true or false positive, but it's getting to that point to where with that data, you're supporting the fin crime process, and you're supporting obviously the SARs and the STRs that you're filing with the relevant data points that you've already captured. So yeah, I agree with you. I think building out a strong KYC and SIP program, which includes obviously significant watch list filtering, not just sanctions, but other watch lists that on a risk-based purpose. I think that's really going to support your AML program very well and your fin crime program for sure.
Agreed.
Thank you for your answers. So maybe we can extend that question with what are the essential steps with developing a watchlist screening system from scratch? How you try to develop a watchlist screening system for your company, for example?
You want me to kick this off, Mario?
Yeah, go ahead.
Okay, so I think in any situation, I think you're going to want to identify your full scope of what you're trying to solve for. I think every financial institution is just going to find themselves at an impasse where they're trying to make a determination as to how complex their system really needs to be. Are you answering to just regulators alone? Are you answering to sponsor banks? Are you answering to different financial partners as far as payment processing or payment gateways and the different methodologies on how you're actually moving money? And I think that's really going to put you into a very significant place. There are still many financial institutions out there who choose to just download the SDN list from OFAC and screen against it manually, maybe just doing like a simple control F or other ways that they can screen against it, or doing like a VLOOKUP on a spreadsheet download. So I think buy versus build is always going to be a very important part of you either assessing a new program that you're building out or just assessing your existing program. There's always going to be a cost implication, right? But I think those are going to be the two initial steps that I would focus on, is just trying to understand how complex the program really needs to be commensurate with, like Mario said, not just your risk tolerances, but understanding the tolerances of the institutions with whom you're partnering. I think that's always going to be an important facet of scoping your determination onto how you're progressing down the rabbit hole of the complexities associated with your sanctions and your fin crime programs.
Yeah, and I'll add to that, Chris. It's all good points. very good points. You know, for some of us, you know, there's an international component to it, and you know, and jurisdictionally, you know, there are different screening requirements, not only from the PII perspective, KYC perspective, CIP, but also from data protection as well. You know, it's so as you go through, you know, building a program and you're seeing that you're possibly having other jurisdictions, it's incredibly important to make sure that that data, how it's housed and how it's screened, and the input and output coming out is actually falls in line with the requirements of that local jurisdiction. The screening requirements in the U.S. are very different from others that we have seen, you know, and that all goes back to that CIP, right? That goes back to that. Hey, what am I capturing at the beginning? What are the required documents that I need? You know, because it's not the same everywhere. In some places, it's very difficult to get some documents. In others, it's more of the passport is what is the primary identification used, and also the veracity of the verification of that. If I'm using a driver's license or a passport, maybe the jurisdiction where the customer's at, it doesn't have the same standards as far as, you know, the protection of that data, of that information, or the validity of that information. That's the data coming in that you're going to onboard, that you're going to put through your IDV vendor, and then that's going to go to screening, right? So if it's faulty data coming in, we know that screening process is going to be faulty down the road. So right up front, the importance of, you know, that IDV, that documentation verification. What is verification for your institution? Is it one source solution that's going to say it's verified? Is it a dual layer solution that tells you that it's been verified? Is it a risk score that tells you that it's been verified? Is it a manual review that tells you that it's been verified? So all those things put together is the beginning of your watch list process. So
that's a really good point, and I think the last thing that I would consider once you've decided on what that kind of waterfall approach looks like in the verification process is then identifying future event triggers, right? It's never just
yeah,
a set it
absolutely.
and forget it, right? So we're going to verify when they onboard, and then how often am I re-screening these individuals? And I think that's always an important part to fold in as well.
Yeah, absolutely. You know, also taking into account thinking of the past, you know, looking at how the ongoing screening, you know, is managed, you know, how, you know, list updates are being managed, you know, what type of output, you know, I think you and I have had conversations where, you know, it's great to have that testing program. You have to have that testing program, which I know we're going to talk about. You know, testing your data, the efficacy of your data, you know, the input that makes sure that it goes through properly, the output that it matches. But not only the false positive, but those false negatives. You know, when you have potential alerts that, hey, I had so many that were false negatives that were suppressed by the system, we'll have you dip your toes into those and run a QC check to see, hey, were these actually false negatives? Is there any type of rate that is past the tolerance for the entity? It could be something as simple as code. It could be something where data is not coming through properly. It could be something that if you have a layer on top of the alerting system, another system on top of that, it could be suppressing somehow. So looking at those, I think, is something to think about. Yeah.
Yes, thank you guys. You actually touching importance of the data, or how it's housing, or how it's screening. And my next question, I guess, it's really related with it, and it's about the quality of the data. And maybe Christopher, I can ask you in first to you. What role does data quality play in the development of a robust watchlist screening system?
You know, I'm glad you brought this up, because Mario was really touching on this in the previous discussion we were having. So obviously every jurisdiction is going to be different, and I know, you know, speaking from a U.S. perspective, when the New York Department of Financial Services implemented Part 504 of the regulatory requirements, it really shifted the mindset. And it drove financial institutions into a different way of better understanding their data, and so it really pushes for two key components when you're looking at your sanctions program, which is a data validation and a model validation. So on the data validation piece, you're looking at verifying the validity of your data. So the second you receive that data through the CIP process, and then you're resending that data through any type of watchlist filtering system, you're verifying that your data is good. So the example that Mari and I were using when we were chatting about this a week or two ago is like, just take date of birth, for example. Well, in the US, the formatting for date is month first, followed by day, followed by year. But you're looking at the EU, and it's day first, followed by month, followed by year. That simple error or oversight when you're actually sending your data out to verify can completely throw off any type of DOB suppression rules that you might have in your screening protocols. So verifying and validating your data is an essential part of your program. And I know it's very heavy, obviously, in the New York, Part 504 regulatory requirements, but I think it's essential for people to start looking at this, regardless of whether you actually do operate in that region and have to comply with those regulatory requirements. I think it's a good way for you to better understand the data that you're receiving and digesting, how it's housed in your data warehouse, and how you can actually use that data to better support your adjudication processes. And then when you get to the model validation, even further in, like to Mario's point, any type of suppression rule that you have in your system, you should be revisiting that. You should have a quality control process to identify not only true negatives, but I mean, what did you say, Mario? You said false negatives. Not only false negatives, but also true negatives, right? Those are the worst. And so, testing the system, kicking the tires on it, and adjusting accordingly to say, I'm not suppressing the alerts because I don't have the bandwidth to manage them. I'm suppressing alerts because they're truly just white noise and they're not benefiting me. So I think the data validation piece and assessing with your engineering team how the APIs are functioning and how that data is being sent and received, and then assessing your model on a regular basis, I think both of those are actual absolute key components to just better understanding how you're managing your data and just the quality of that data and how it plays into a robust watch list screening system.
Yeah, it's interesting that you bring back up the API. I know that you and we've examined APIs left and right.
Yes.
And for a lot of us, or for some of you that are not hands-on with the API process, calling out the vendor for your screening calls. One of the things that I just try to impress on everybody is, understanding the makeup of your API, that call going out, because that call is going to have a specific order to it. It's going to have a specific format to it. It's got to reflect what it is you're trying to screen for. So if you're trying to screen for a DOB, but you don't actually put that on, let's say, the API on the call coming back out to you, not just the one going out to the vendor, but the one coming out to you, it's gonna affect that alert, that screening. So not only does the API have to line up properly for your screening criteria, it's got to be input correctly into the screening engine for the vendor, and the output has got to be in the same order. And then when you have to intake that output and display it in that order. So if that doesn't line up, it's going to actually affect your screening. So your alerting is going to be off. Your fuzzy matching is gonna be off. It's not going to capture the risk appetite for the entity. It's going to affect possibly your staffing levels because you have different actual alerting levels. You could be under alerting, and it could cause a finding if you don't validate that entire API process on its own. That can actually cause problems for you down the road.
So true.
Yeah.
Yes. You call the API process. Maybe we should touch the challenges and potential pitfalls during the deployment phase, and how can they or how can companies can be mitigate that process?
If you want to take this, Mario, go ahead. I can chime in after.
No, yeah, and it's that the understanding of the data that you're going to screen against, you can break it down, between your PEPs, between your sanctions, OFAC or watch list screening for sanctions, and then your adverse media news. For those that are not aware, you can actually, depending on your solution, you can actually assign specific fuzzy match rating levels for those, for how close you want that matching to be. So your PEPs will be at this rate for this type of jurisdiction, and this is what I'm going to screen for. That's one API call and one channel. So if you're jurisdictionally based, you can have multiple calls just for PEPs. Same thing for sanctions. You know, I want to screen against these watch lists and make sure that they're in the correct order that you want to screen against, from input all the way through output at this level. In this, anything below this, I want to suppress. Same thing for adverse media, and testing that for each one of those 3 segments and for each jurisdiction. Now, once you've built that general process and it's documented and risk approved and accepted, the output coming in, you have to actually read it. You have to look at that, possibly that JSON script that's coming back to you, and does it make sense? You know, I wanted a 2-year DOB suppression. So anything past a 2-year difference on date of birth, I want it suppressed. Well, are you getting that or not? You know, are you, and if you are not getting that screening properly, what are your analysts doing about it? Because, you know, you're going to do this, but stuff happens sometimes in code, and things sometimes, you know, come through. So everybody's got to be aware of what you're trying to do. And it all comes down to this API channel. It's reflective, it's representative of your risk. So I know you and I have gone into this quite a few times. So,
you know, and you touched on so many really fantastic elements. And the last thing that I would say is, push hard with your vendors to see if you can actually work in a sandbox environment. I think that's truly essential. I've worked far too often with different vendors that didn't offer the sandbox environment, and I think it was just an absolute pitfall when it came to us better understanding how the system was really going to perform. It's nice to kind of see some dummy data, as it were, and you know, screen a batch of users to see what the output's actually going to look like before they go live. Because if you try to do that in a live environment, then you're obligated to review all the alerts that are generated. Absolutely. And everyone always says the first time is the worst time. Like the second you turn on that system and you're validating a huge database to get caught up or possibly do a look back, it can be just absolutely detrimental to your team. So I would say test the system, do it in a sandbox, do it to where you can demonstrate that it was a test, and then you can obviously purge those alerts accordingly and not find yourself in a situation where you have to disposition and adjudicate those, for sure.
Exactly. Yeah. And you know, for some of you that are not part of that process, that is maybe a little bit divorced the way just the organization of the company is, or your bank or your fintech, like you said, you know, fight to have access to it as well, to have that understanding, to be part of that discussion and be in that room. Because you may make one decision here, but then you're taken out of the picture for whatever reason. But you try to be there, because you should understand and be part of this process, that risk acceptance process, the ongoing due diligence process, quality control process, risk assessment process. Understand what it is that's actually happening, even down to that code level. It's imperative for you to be able to try to do that.
Agreed.
Yeah.
Yes, you're right. Simulating and preparing is a part of the process. So as a sanction scanner, we always provide that sandbox feature to our clients for demonstrating their rules. And my next question, I'm coming to hot topic, and I want to talk about some role of AI. Yes, we have to.
Chris, role of AI.
Yeah,
the role of AI.
Yeah.
Okay, so I think it's really funny. I mean, you listen to an investor call and the CEO mentions AI, and all of a sudden their stock goes up, 10 points. I think it's kind of funny, but it is a hot button, and I think that there's a place for it. I think that you can use it to improve your scripts when you're trying to provide justification and reasoning for your adjudication, especially if you're finding yourself in a situation where maybe you've got some junior analysts, or you don't have templates yet developed. You can obviously use AI to help you design your templates. I've used it to kind of help me wordsmith stuff when I'm getting writer's block on a policy or a memo. So I think there's definitely a really great place there, because obviously it's pooling tons of resources and tons of data elements to give you some decent feedback, and it's been quite beneficial when I've used it with that regard. If you're going to rely on it to be a layer in your adjudication process, I would say just be careful. monitor it. It requires supervision. Treat it like you would if you were allowing your 8-year-old child to help you with your adjudication processes. You're obviously going to need to seriously monitor that. It's because it needs feedback. So don't be reliant on just AI, be reliant on machine learning. I think if you fold the machine learning into it and you monitor the machine learning, that's essential. And the reason for that is you don't want one person's bad disposition to destroy the entire way that the model has been learning. You know, someone wakes up that day, they didn't have a good cup of coffee and they're just pushing through the alerts because they don't care. Maybe they have alert fatigue. You know, the human element changes everything. And so if the model is relying on your human element for it to learn from, you know, again, circling back to some of the initial statements, bad data in, bad data out. So monitor it constantly, and tune it accordingly. Remove the bad dispositions from its learning model and make sure it's only learning from the good dispositions. And so, yeah, if you find yourself really wanting to explore that and you really want it to aid you, I get it and I understand it, and I'm not giving you permission. I think it's, you know, it's your risk tolerance, but I would definitely encourage you to monitor and supervise the model and find the appropriate resources to supervise it with you. That the appropriate team from your data team and your engineering teams. Don't just set it and forget it. Don't set it and walk away and just say nope, we're good. Always kick the tires. Always question it. You know, what's that old saying? The old quote: trust but verify.
Yeah, it's you know, I take the stance that I'm already going to go to try to find a bias within it. I am going to assume that it is biased. You know, it's representative of what humans are doing to this code to build this model, right? And really looking at, you know, building out a good, challenging control process. You know, as you build it, you know, do you have comparisons before this or before, you know, as you're working in your sandbox, you know, is your this new model, this AI model better? Is it capturing is it having a more accurate output in comparison to your traditional model before you started this, or to a prior model that you're deprecating? You're going to a newer model that's going to be doing all of this nice, beautiful work, you know. And the same thing, just like, you know, alerting, you know, are you looking at the positive and the negative output of that model? You know, what's it representing? How is it affecting always and always, always, always? How is it accepting, representing, or supporting your risk acceptance and your risk appetite? Because down the road, as a model grows and you don't challenge it, it could display other things. It could do other things and run away itself from what the intent was for that risk. If I'm supposed to stay at medium risk, and for 12 months down the road, nobody's challenged it, and due to the alerting, I am now at high risk. How do you fix that? How do we report this? Is this actually reportable now? Does this need board approval, committee approval? You know, so it can have these knock-on effects if you don't babysit that model and have dedicated teams for it, you know, which is incredibly important. So
true.
Yeah.
So I am also sharing the same idea with Christopher about machine learning. In my opinion, there is still too much room for machine learning applications, and leaving the general control of the whole process to AI model. I'm still skeptical in that manner.
Yeah, we're early on still. So.
Yes, but in future we will see exciting things, I guess.
Yeah.
So these are all my general questions, by the way. Thank you for answers in the process. And I want to bring some questions from our audience. If you have any questions from audience, I'm calling to you. You can write on them chat, and I will ask these questions to our speakers. Maybe we can wait for 1 or 2 minutes.
Okay. Oh, we did not touch on the selection of your watch lists. That's very, very important. Very important.
Maybe you can bring your ideas about that topic while I am capturing questions.
Yeah, no problem.
Yeah.
I you know, and Chris, you'll be very familiar with this. You know, you can oversubscribe and undersubscribe to your watch lists, depending on your jurisdiction, what it is that you're trying to do, depending on your customer base. And this goes back to knowing your customer. What is the true representation of your customer base? Because if you're doing, you have a very large retail, very low business volume, or breakdown of your customer base, your screening might be a little bit different. If you're heavy in commercial products and services, there are other watch lists that incorporate corporate information, entity data. So, and also, what is the requirement for the jurisdiction for those customers? These are the minimum ones. And I know we've had exercises where we've had to divorce these lists and compare these lists. This list gave me this output, this list gave me this output. Where's the overlap? How much of that overlap? Because if you don't do that exercise and you just go, give me all your lists, well, your alerting rate is going to be into the teens. You want to have a manageable, correct reflection of that risk. But if you have too many lists or not enough lists, that reflection is it won't be there.
Mm. You hit the nail on the head. It's not just your customers. It's knowing your product.
Yeah.
Far too often I've watched individuals join companies and just really not pay too much attention to exactly what the product offering is. And that really does help you to tune it. If you're 100% US based, well, then you have fewer lists that you really need to screen against. And to your point about oversubscribing, I've watched companies oversubscribe to watch lists. And they do become redundant. The same people who are on the SDN list very well are on, the Canadian watch list, and they're on, His Majesty's Treasury list in the UK, and they're on the UN list. So, and if your system is not smart enough to group those into one single alert, and you have multiple alerts for the same alerting criteria, it adds to the volume. And again, it feeds into the alert fatigue that your team can fall into. So, I do agree with you. I think it's absolutely essential that when you're selecting your list, you can start small and you can work forward. I think it's important to tune it to your regulatory needs first, and then industry expectations second, and then you can start then going beyond that into some of your own risk tolerances. So I think it's valuable for you to really truly assess not only the system you're using and how it performs for you, but assess it against your products and services, assess it against your customer base, and make sure that you're making a well-informed, relevant decision. So you're spot on with that, Mario.
Yes. One of our audiences bring a question. Actually, it's related with that topic, but maybe you can add some different approaches with that question. And they want to ask, how can organizations balance their need for through watchlist screening with the importance of maintaining a smooth and efficient customer onboarding process?
Oh, I love that question. Do you mind if I take this one, Mario?
Go for it. Yeah.
Okay. So the neat thing about your entire Mario talked about this, the entire waterfall that you're trying to develop when it comes to SIP versus KYC versus sanctions versus high risk ranking, all those processes that you're working on. And again, this is jurisdictional, so keep this in mind. But I think it's important for you to make the determination, when does a customer truly become a customer? So I had this issue. I won't mention the company, but one of my previous companies, we had to make a determination. Are they a customer when they're visiting our website? Okay. Are they a customer when they create a user profile? Are they a customer when they add a banking account to it? Are they a customer when they finally click the button and they're purchasing something and money is finally being transferred? And so in all of these different stages, you have an opportunity, again, based on jurisdictional requirements, you have an opportunity to capture bits and pieces of information throughout the process, making it feel like there's less friction. I'm using air quotes, even though you can't see me, less friction, because that's the big hot button, especially when you're working with senior leadership, but you're still capturing all the relevant information. You're just doing it in bite-sized formats. Hey, thanks for opening up a profile. Who are you? Oh, I see you added a bank account. Let's verify that you own that. And again, who are you, right? Maybe a little bit more information. And finally, oh, you want to transact. Well, now we're gonna do a little bit more information. Who are you? And so in those different stages, you can build it out beautifully to where and very elegantly, where you're capturing bite-sized pieces of information, satisfying the regulatory requirements for KYC and due diligence and enhanced due diligence, but you're doing it in these different stages commensurate with the overall risk of what that person is doing with the organization. And plus you're saving on the cost of user acquisition. You're saving on the funds that you're spending. I'm not going to sanction screen you and push you through all CIP protocols when all you were doing was perusing through the website and making a determination as to whether or not you even wanted to do business with me. And I'd rather wait until you want to do business with me and you're clicking the button to actually move funds, and then I can verify a little bit more bits of information on you. So that's how I would recommend you looking at it. And again, I'm going to reiterate, look at your jurisdictional requirements, but I think that's a really great way for you to kind of balance a fluid and seamless onboarding experience with minimalizing friction and a positive user experience, but still getting the amount of data that you need to establish a reasonable determination. You know who you're doing business with, and you've assessed the risk on doing business with that individual.
Yeah, I would add to that. That's actually great, Chris. I would add to that. Everybody looks at risk rating their customers. Their customer risk rating model has got to be on point. Now, obviously, to know who you're dealing with or who you're doing business with from a high risk perspective. But when you have a low risk or a medium risk customer, what approach are you? Because that's going to be the vast majority of your customer base usually. What approach to screening and onboarding you're going to take with them? The veracity of a customer's onboarding process at high risk is usually not low risk or the medium risk waterfall approach. So, if you rate a customer low and medium, first of all, you need to make sure that you're testing that customers are not inadvertently being placed in those levels due to screening or due to something else, because you believe that, hey, low is faster, medium is not as fast, and obviously high risk, it requires usually enhanced due diligence. So that screening model that you have should be representative of the risk levels for your customer base, but that the testing of that risk level is also adequate. That the information that you're intaking for those customers, what you're asking your customers at onboarding through your application or the website, what you're asking them is enough for you to make that determination, because it's going to affect your screening process. So how you're asking the questions, when you're asking them on your onboarding flow, on your model, through the screens, what is the yes and no? How long does it take for customers to do this one, or how long does it take them to do this? So also analyzing where your customers are getting stuck on your onboarding process. That level of granularity of seeing how the customers are walking through the process also helps out a lot.
Thank you. While talking about being updated in the process, one of our audiences asking that what should companies for staying current with regulatory changes and evolving threat landscapes in terms of continuous or ongoing monitoring and updating their watch lists?
Yeah, Chris, I'll start with this one if it's okay.
Please.
Yeah, I think the ongoing monitoring aspect is two ways. It's on both sides. The entity, the financial institution, has to have a clear statement and policy statement as to what they consider ongoing monitoring. Is it PII changes? Obviously, you would expect that. Is ongoing monitoring going to be, how is it divided for your customer risk ratings? For your customer risk rating levels. What are you going to screen at those levels? How does that match up to the vendor? What are they doing for you? Are they screening for you, or do you have to push out a request nightly for a list update? Are they going to be sending it back to you automatically, or is it going to go through maybe a filter on a database model or a main CDM? Is it being filtered through another type of criteria? So what you get is different. So that ongoing monitoring has got to be detailed as to what the expectations are from your side and from the vendor side, and that they're understanding in an agreement, because there have been situations, I've heard of situations where, they thought that they were getting daily screening, but no, the daily screening is actually done weekly. that level of understanding is needed. And I know you've seen this, Chris.
Yeah, I think it goes back to the trust but verify. So I think it's great to find really awesome third-party solutions for your watch list filtering needs, but I would never settle for the status quo. And I think beyond just the ongoing monitoring and validation of your user base, the ongoing monitoring and validation of your system is essential, right? And you touched on that. So I think setting up a process once a year, take 30 minutes out of your day once a year and download a couple names off of the SDN list that A are still on it, and B some names that have been removed, because that's always a challenge, because sometimes companies update the SDN list with new names but they don't remove the names that have been redacted. And misspell them a couple times. Change the letters a little bit, switch the first name and the last name, test the fuzzy logic, see how it performs, kick the tires on your system. Your auditors are doing it. Why wait for your auditors to come in and assess your program to get feedback from them that the system isn't performing well, when you could do it proactively and actually work with your vendor to fix it before your auditors ever show up? It's low-hanging fruit. And it does not take very much time out of your day for you to test the system. 30 to 45 minutes once per year, and you're giving yourself a better level of comfort on how your system is performing, and you're able to hold your vendors accountable to the promises that they've established in their master service agreements with you and the SLA that they've established.
Yep. Right. There was one more last question in my QA session, and it said that how we can reduce the false positive when we are using a software. Do you have any best practice you can discuss about it?
So can you reword that? Can you say that one more time? How we're reduce false positives when we're using what?
When you're using a software, AML software, I guess.
Oh. So this circles back to the opening statements on what we've been discussing today. Your data validation, I think, is essential to help you reduce false positives. And then, like Mario touched on this, any suppression efforts that you can implement, like a very common suppression is the DOB suppression, right? Plus or minus 2 years, plus or minus 5 years, whatever you're comfortable with. So that's going to be essential for you. And then any additional piece of information that you can get, first and last name is really common what we capture. Well, what about middle? Middle can help you alleviate a lot, especially when you're looking at the way the SDN list is, with there being middle names included. So first, middle, and last can be essential if you're only capturing first and last initially. Location data can help. There's different things you can do, but it's important to understand how your software is going to help you, because not all softwares are the same, clearly. So some might not offer a geographic or location mismatch for auto suppression. They may only offer a DOB. But again, test your fuzzy logic, and there should always be that kind of relative correlation standpoint. I'm looking for only 100% match all the way down to, let's just say, like 70%. That should always be assessed, right? So I think a lot of times companies just automatically just go with like the standard. Well, I just want to go 90%. Well, why did you choose 90%? And this goes back to model validation. And this is, proving that you've made the appropriate decision in your model initially. I chose 90% because I tested it, and I saw that at 85, there was too much white noise. And I saw that at 95, I was losing some of the essential alerts that I really wanted to see. So I chose 90. So that's essential as well, is just kind of kicking the tires in your system, justifying the reasoning for you selecting the thresholds you're selecting, and then again, kind of testing that fuzzy logic and making certain the system is performing to your expectations and meeting your risk tolerances.
Yeah, I would add to that, Chris. Going off of that fuzzy logic testing, sometimes, and this happens, we're busy sometimes. There's not, you wish you had more support for a myriad of reasons. Sometimes a vanilla type of approach is installed, where some general settings are there. They're tested by the vendor, but you're not able to do full testing, and then you find yourself 6 months down the road and you're like, oh, I hope it's working, right? And that's the worst position to be in, because it keeps you up at night. So one of the things that I would suggest is, it's like a false positive exercise. Maybe take, create scenario testing. So I'm going to take let's say 100 alerts. I'm going to go into shadow mode. I'm going to go and I'm going to test on Sandbox 100 alerts that in production were, they all came out as potential true matches, but after a review, they were all actually negatives, right? So all of these alerted as potential true matches. And then you go into Sandbox or shadow mode, and you actually, you look and see how your updating of those screening criteria affect those 100 alerts. So these alerted under this model like this. So for this one, I'm gonna put a 1-year DOB. For the PEP screening, we're gonna put, let's say, 90% or 85% if you're more conservative. For OFAC sanctions, I'm gonna do 100%. And then I'm gonna do a nationality or an address disqualifier. And I'm going to run those 100 alerts against that scenario. And you create a myriad of scenarios, 5, 6, 10 scenarios, where they all have different levels of screening criteria and different fuzzy match rating levels. And remember, this is in Sandbox. So once you get the report of all that data going through, or maybe you do 1,000 alerts or 10,000 alerts to have a more accurate representation of the effect of all those different levels of fuzzy match rating. And it also keeps the vendor honest. Are they actually suppressing it? Or is it or is it not alerting because I'm changing it in different models? Is it even working? So having those scenario tests from what has already come out as output in the live environment can give you a sense of, hey, this is what I have. This is what it looks like if I deploy one of these scenarios. That's one way to try to see where it is that you're going to go if you have to do it sort of a manual approach. So.
Yes, actually, I don't want to interrupt while Mario was talking data validation in my previous questions, actually. But in sanction scanner, that passive analysis is one of the must-use feature by our customers also, and we are working more and more about its accuracy, and I guess it's really important, and it's really backed by machine learning applications. So yes, still there is more room for machine learning. So guys, I'm really appreciate to hosting you today in here, and I guess our questions are done and finished. Thank you for participating for everyone, and I want to finish that webinar in that manner. Thank you guys for everything. You enlighten us with your information and with your knowledge about the topic.
No, thanks for having us. It's great to be here.
Yeah, thank you.